This is Bite-Sized Business, the channel where we take company news and reports and simplify it down into a few important metrics and ratios to determine a company's financial health. In this installment, we will take a deep dive into Archer Daniels Midland. The starters. Archer Daniels Midland is an American agricultural conglomerate founded in Chicago, Illinois in 1902. ADM has three segments, which include Ag Services and Oilseeds, Carbohydrate Solutions, and Nutrition. The company primarily works in the growing, transportation, and processing of agricultural goods. Among these, they produce margarine, biodiesel, seed oils, and corn syrup. All of this information can be found on Yahoo Finance by looking up Archer Daniels Midland, which trades under the ticker symbol ADM. The main course. In the previous 12 months, revenue stands at $87 billion. This is down over the last 2 years, where 2022 revenue came in at $101 billion, and 2023 revenue came in at $94 billion. This comes primarily from supply shocks that hit the global market. In the same time period, net income dropped from $4.3 billion down to $1.8 billion, representing a 60% drop over the course of 2 fiscal years. Now, off to the balance sheet where we can look at total assets. Over the last 2 years, company assets have held steady, only dropping by about $2 billion or 4%. In this time period, liabilities dropped by $3 billion or 9%. These changes resulted in a net gain of equity of $1.8 billion over those same 2 years. Total debt has dropped by $1 billion, but net debt, which is total debt less cash and cash equivalents, is down $1.6 billion in the same time. Off to the income statement where we can look at free cash flow. Free cash flow is looking strong, sitting at $3.5 billion in the trailing 12 months, allowing the company to buy back nearly $4 billion of stock within the last 12 months alone, and $4 billion more over the previous 2 years. This is a graph of the outstanding shares of Archer Daniels Midland. I had previously mentioned that they had bought back $8 billion of stock since 2022. This is represented in this chart where you can see since that time period, they have continually bought back a fair amount of stock. In the trailing 12 months, they have bought back nearly 10% of the stock. The point of a stock buyback is to take shares off of the public markets so that the shares individual investors own represent a larger portion of the company. When a company does a buyback of stock, they are pretty much handing their shareholders that amount of money, and in return, the shareholders' investment will increase in value as the company's value isn't changing, but the amount of pieces it's broken up into is decreasing. The last step on this trip is the dessert. This is all of the ending metrics that are relatively important for gauging a company's financial health. So the company's name is Archer Daniels Midland. The ticker symbol is ADM. They're in the agricultural industry. In the last 12 months, they have done $87 billion of revenue, $4.1 billion of EBITDA, $1.8 billion of net income. They have a total debt of $9.6 billion, $54.5 billion of assets, $30 billion of liabilities, and this leaves us with the number of $24.5 billion of shareholder equity. This is the difference between assets and liabilities. They have also done a free cash flow of $3.5 billion. All of the numbers in the gray boxes are in thousands, and the date of the entry was November 26th, 2024. So if you're watching this after that date, some of these numbers may have changed if they have reported another quarterly earnings. Some of the numbers you might not be familiar with, or metrics you might not be familiar with, are EBITDA, which stands for earnings before interest, tax, depreciation, and amortization. This number is a popular metric used by investors to gauge the true profitability of a business. Another important number is net income, which is the amount of money the company keeps after all of their expenses, whether it is SG&A, taxes, or depreciation on some of their assets. And free cash flow, which is the amount of cash that comes into a business during a given time period. This could be through sales, or this could be through selling of assets, or even taking up debt. It's just the amount of money that came in during that time period. Some important ratios are debt to equity, debt to EBITDA, EBITDA margin, and net profit margin. Archer Daniels Midland has a debt to equity ratio of 0.39. That's a pretty low number, and that means that the amount of debt they have compared to shareholder equity is 0.39. And so if they were to sell all of their assets and pay off all of their liabilities, their debt would be 39% of what they would have left, roughly. Their debt to EBITDA is 2.32. This is the amount of debt a company has compared to the EBITDA, which is, again, a metric used by people to gauge the true profitability of a business. And so it's a metric used to see if a company was to take all of their generated earnings and put it all towards their debt to go debt free, how long that would take. In this case, it would take about 2.3 years. You have an EBITDA margin. This is the percentage of revenue that goes to EBITDA. And so for every $100 of revenue Archer Daniels Midland did in the last 12 months, $5 of that went to EBITDA, or 5%. That's the same for a net profit margin. In this case, it's 2%. And that just means that every $100 they do of revenue, they can expect to hold on to about $2 of that after every expense. So some comparisons. So I will first start with this range, in which I have some numbers compiled by S&P 500 averages and just generally accepted ratios for healthy numbers for some of these categories. So for your debt to equity, a low debt to equity ratio would be under 0.75. One that I would say is neutral would be between that 0.75 and 1.5. And you're getting a little high if you're sitting at over 1.5 times. Debt to EBITDA. So a low debt to EBITDA would be anything under 2 times. Most companies try to be within the 2 to 3 range, which would be neutral. And anything over 3 is normally considered to be high. A healthy EBITDA margin is normally between 10 and 20%, which is the S&P 500 average. If you are below 10%, you'd be considered low. And if you are above 20%, you'd be considered high. And then same thing with net profit margin. The S&P 500 average is between 7 and 10%. If you're below 7%, you would have a low net profit margin. And if you are above 10%, you would have a high net profit margin. For your debt to equity and your debt to EBITDA, you would prefer to be in the low or neutral range. And for your EBITDA and net profit margin, you would prefer to be in the neutral or high range. When it comes to Archer Daniels Midland, they have a debt to equity which was 0.39, which would be very low, coming in at about half of what the top of the low category is. They had a debt to EBITDA of 2.32, which is neutral. It's within that 2 to 3 times range, and that's pretty healthy. It's well within the range of what investors would like to see. They have a low EBITDA margin of 5%. That is relatively low compared to a lot of companies, but they are in a very low margin, high revenue business, and so that's made up for the fact that they have $87 billion of revenue. And they also have a low net profit margin of 2%. Those low margins do hurt the prospects of the company, because that means if something is to go wrong, there's not much wiggle room for them. But altogether, because they are so healthy when it comes to their debt to equity and their debt to EBITDA, the fact that they're low on their EBITDA margin and their net profit margin means that I'm still going to give ADM a green light when it comes to financial health. Because while their EBITDA and net profit are low, all of their other debt margins are also really low. And so that means that they're not really being pressured by interest payments like they would be if they were sitting at a higher debt to equity or a higher debt to EBITDA margin. Every good meal has a check at the end. And in this case, Archer Daniels Midland being the meal, and the check being some of the drawbacks this company has. If I look at the 1 year graph, you will see the stock has dropped significantly from a high of about $75 or $76 to a current share price of $53. This large drop right here was caused by some accounting irregularities that they found at the beginning of 2024 in some of their previous earnings reports. They did recently come out and say that they fixed it, and I believe it was 8 earnings reports that they had to fix, but that still is a pretty big issue because the market does get worried when it sees accounting irregularities. A good example of this would be Kraft Heinz, the maker of Heinz and ketchup or Heinz mustard or Kraft mac and cheese or Kraft singles. Kraft had some similar issues where they had some accounting irregularities, and that's one of the reasons that their stock went from $92 back in 2017 to sitting at around $32 now. So those do have some lasting effects, which is kind of an issue if you are a prospective investor. But they have come out and said that they have fixed these, and so it's just a waiting game on whether or not they actually did. Some other information that could be important for this stock is Donald Trump's appointment of RFK Jr. to the head of Health and Human Services, as RFK Jr. has spoken widely about disliking seed oils, and I have heard that he supposedly would like to shift soft drink companies away from corn syrup and back to cane sugar. Archer Daniels Midland being an agricultural company, they do make a lot of corn and they do process a lot of corn syrup, and so that could be an issue for them. Another thing that RFK was talking about wanting to go after was he had mentioned with Fruit Loops wanting to go after the artificial dyes that are in the American products, while the Canadian products use fruits and other natural colorings as dyes. Archer Daniels Midland is a large producer of natural dyes, as they don't make synthetic dyes from what I could find, and so they could be benefit from that, which would be something decent that we could see with some of those changes. I'm not fully sure if anything will be able to happen with the corn syrup, as the American corn industry and soda industry is very large, but it is still a point of concern that one could have. Thank you for tuning in to the first video of this channel. I hope you enjoyed the content on Archer Daniels Midland. If you have any suggestions for other things that I could report about a company, whether it is, another number, another metric about some of their earnings, or if you have some suggestions over companies you would like me to report on in the future, please let me know in the comments. If you have any critiques or any advice you want to give me about these videos, please let me know. But again, thank you for tuning in, and I hope you will stick around for future videos. Thank you.